In the equity quadrant, looking at the December Russell futures, which outperformed, trying to play catch up today early to the upside, but then turned lower this afternoon and led to the downside as well. The high today was 25.39.30. That was up 0.85%. And the low today so far was 24.81.90, down 1.43%. With some time still left in the session, the Russell is still down 0.71%. This morning on the cash stock market open, the Russell was the only one of the four major U.S. indices to be negative on the day, but it turned around and ended up rushing past the NASDAQ and the S&P in percentage change. But then the FOMC cut rates by 25 basis points. That pushed the Russell lower in the mid-afternoon. This cut by the FOMC reflected the Fed's view of moderating economic growth and elevated inflation. It highlighted slower job gains and a slightly higher unemployment rate, but the committee noted that inflation remains above target. The statement dropped the language about further rate cuts, emphasizing data dependence and the need to balance risk to employment and inflation. Powell even said that a December rate cut is far from a foregone conclusion. The committee also announced the end of quantitative tightening as of December 1st, signaling a pause in balance sheet reduction. Now, on the earnings front for the Russell, so far in the third quarter, 72.5% of companies in the Russell that have actually reported actual earnings have beaten estimates, showing a higher beat rate than in recent quarters. Earnings misses have been fewer and less significant, indicating relatively solid corporate performance compared to analysts' expectations. Now, this improved beat-to-miss ratio suggests better than expected momentum in earnings in the small cap segment, but it's based on a very small data set, as only about 7 or 8% of the Russell stocks have reported so far. So clearly the most important thing today was the cut and then the relative hawkishness of the comments and the statement after the cut.